cost of living in South Africa continues to be a concern following the latest rate hike by the Reserve Bank. The repo rate, the repurchase rate at which private sector banks borrow rands from the Reserve Bank was hiked by 50 basis points to 7.75%. The prime lending rate, the benchmark rate at which private banks lend to the public, well, that's at 11.25%. Joining us to discuss the outlook for the South African economy, Annabel Bishop, who is the chief economist with Investec. Good afternoon to you, Annabel. Thank you so much for joining us. So what is the flip side? I mean, we know that when interest rates go up, savings go up, but what about cost of living? What about the flip side of the coin, the other side of the coin with respect to cost of living?
Yes, absolutely. We've had the cost of living go up because inflation has been so rapid. That's the change in prices. And of course, that's been a year of very quick price increases. But we've also had higher interest rates at the same time as well. And of course, for those who are indebted, it makes their cost of living rise too. And that obviously is intentional from central banks around the world as they seek to get consumers to reduce spending on other items, which in turn then limits demand and stops the quick pace of inflation.
Speaking of inflation, Annabel, those interest rates that you've mentioned to combat that, I want to ask you about the triggers behind year-on-year inflation for February in South Africa. Climbing, headline inflation climbing, food inflation has been really high, over 13%. Core inflation climbing, I think, to 5.2. Can you take us through the triggers for what has seen inflation in South Africa rise?
Yes, of course. Look, we found ourselves in a situation where over the past 12 months, South Africa has not kept pace with the hikes in the United States. So the US has hiked interest rates by more than South Africa has, and that has eroded the interest rate differential between South Africa and US interest rates. In other words, it's eroded the risk premium that investors seek from South Africa to invest in it, because obviously South African portfolio assets are seen as risky assets. So we've seen substantial rand weakness over the past 12 months. These was one of the determinants of rand weakness. There are a number of others. But the bottom line is that when we see significant rand weakness, it pushes up the dollar price of commodities for us. So if we bring in oil or petroleum products, those are dollar-based commodities. And in rand terms, that then exacerbates the cost. The same for food as well. So food, as you rightly mentioned, has risen quite steeply from a price perspective over the past year. Now, of course, as well, we also see that in February, we did see a normal survey event take place for medical costs, and that also pushed up the inflation rate to a fair bit. But really, we have found that rand weakness has been a key component, also increasing fuel costs for South Africa by about a third of the overall transport effect.
Wow, lots of headwinds there. Thank you so much. I do want to look at your outlook for inflation over at Investec. It seems like you see inflation averaging downwards. 5.2% is what I think. No, 5.3 for 2023 and then 4.6% for 2024. Can you give us some reasons behind why you think this is going to average downwards for the year?
Yes, so we were talking about the high commodity price effects earlier, and of course, we move through the year, we're likely to see base effects lowering inflation, so that's likely to help to drag it down somewhat. Over 2024 as well, we're not expecting to see such substantial headwinds to inflation as we saw over the past 12 months as well. Our forecasts for 2024, they're not dissimilar to those of the South African Reserve Bank. However, we would caution and say that this year's forecast, 5.3%, may have some upside risk. And of course, we recently saw OPEC Plus cut its oil quota, so it's going to cut supply. And of course, that saw the oil price jump up, so that will then have some inflationary effect going forward.
Thanks. So if inflation is averaging downwards, and you've just taken us through the reasons, how many more rate hikes do you think we'll see from the Reserve Bank of South Africa, I guess, going forward?
I think we could probably see none to one more hike. And of course, the recent hike at 50 basis points was greater than the markets expected. The markets expected a 25 basis point hike. It came through at 50 basis points. That actually saw quite significant rand strength because we are starting to rebuild some of the damaged differential between our interest rates and those of the US, starting to rebuild the investor risk premium. And from that perspective, we did benefit with the currency strength. The point really that going forwards, much will depend on how the domestic currency influences inflation. But I think the Reserve Bank is quite worried, and that is why we think we may possibly have one more interest rate hike, or perhaps none. This is against the backdrop of the United States seeing no more interest rate hikes. Of course, if the US does hike interest rates further, then it's much more likely that South Africa will continue to do so too.
Now, speaking of worries, the economy, 2023, your GDP forecast for South Africa, I think you've revised them downward twice. Is this all about Eskom?
Unfortunately, it is. We actually, although part of it is also due to some calculation effects by the statistical authority to calculate GDP. But first of all, in January, we saw on the 22nd that Eskom highlighted we're going to have severe load shedding for the next 2 years. That really saw us drop down our forecast for GDP. It was at close to 1.1%. We dropped down to 0.7%. If we average load shedding of stage 4 to 5 for the next few years, but certainly for this year, we would find ourselves seeing GDP growth of about 0.4 to 0.6%. That's the metric. That's the effect it has. Of course, the global outlook has improved somewhat, so we chose 0.7% to reflect this. But now, of course, we have obviously seen the GDP figures come through from the fourth quarter. They proved much worse than was widely expected, and that lowered the base from which GDP will start in 2023, and of course then moderates the likely growth rate. We've got 0.2% from GDP. We obviously then had the Reserve Bank come out and say they also have 0.2% from their forecast. So these are really the risks that we see going forwards, a weak growth environment and some upside risk to inflation.
Thanks for that, Annabel. If we look at the fourth quarter of 2022, what we saw with South Africa's GDP, and then coming forward to Q1, is the South African economy facing the risk of a recession?
I think very much so, yes. It's termed a technical recession where we just see 2 quarters of contraction, but a recession's a recession, and this is really the effect that load shedding is actually having on South Africa. The concern we have is that there's not much being touted for the second and third quarter of this year that will help alleviate the electricity crisis that we have. So we're finding ourselves in a difficult situation in South Africa. Insufficient electricity supply is eroding the productive capacity of the economy, and in turn having a negative effect on economic growth, and so it will have on employment as well.
And we saw the rand, appreciate when the Reserve Bank hiked the repo rates. But how has the rand fared so far this year? And what's your outlook for the currency?
Well, actually, the rand's done quite poorly over the past 12 months. It reached about 18.50 to the US dollar, actually 18.81, compared to 14.50 a year ago against the US dollar. And of course, that's come on the back of the sharp downward revision to global growth forecasts coming through on higher inflation, higher interest rates expected around the world. And that, of course, then raised the risk aversion in global financial markets. And we saw risk assets, such as emerging market portfolio assets, but of course emerging market currencies, we saw sell-offs. So recently, with the 50 basis point hike that we saw last week from the South African Reserve Bank, the rand has actually managed to pull back towards about 17.60 to the US dollar. But of course today a bit of weakness from the currency, and that comes through from worries that the significant cut in the oil production plan from OPEC will obviously have some upward inflationary pressure around the world. So our domestic currency is likely to remain volatile, and of course the recent moves do reflect this.
On unemployment, we saw in the fourth quarter of last year, I think it came down to 32.7% from 32.9 or so in the third quarter. Is there anything to note here with respect to this figure coming down slightly?
Not really. We do see a little bit of seasonal strength over the end of the year when obviously there's increased demand for entertainment, for tourism, people eating out in restaurants, the usual festive period situation, perhaps more work is being taken on in the retail outlets. And that does obviously have a slight positive effect. It is seasonally adjusted, the figures that we often look at, but nevertheless, we think that this is probably the main explanation. So not really something very exciting going on there.
And just as a follow-up, is what I guess are government policies what are needed in order to reduce the South Africa's unemployment figures? Because I know they've been a bit of a talking point in the country as far as their levels, which I think are some of the highest in Africa. Same here in Nigeria, we're at about 33, 34%. Well, what do you think needs to be done in order to address the unemployment situation?
We need to see substantially faster economic growth. Economic growth of close to 0% is just not acceptable for an economy with such high unemployment. And we need to obviously then see much stronger productive capacity, sufficient electricity supply, a repair of the damage that's been done to the rail and the port so we can increase our exports as well, not to forget supply of water and other necessary factors as well. We need to really boost the environment for doing business in South Africa, which in turn then helps to significantly increase employment.
Is there? Do you think there should be a particular focus on youth unemployment, or it should just be those policies should be general as far as their focus?
I think that, we're in a damaging situation where our population growth is exceeding the ability to employ incoming individuals. And with the government having done as much as it can over the past decade or so to increase employment on its side, we need to have an environment where we can see the private sector substantially improving. We need to see a substantial improvement in the business environment so that the private sector can substantially improve its appetite to employ. Of course, we also, and what's really important we haven't mentioned here, need significant strides made in our education system as well, as individuals often lack the necessary skills. And obviously we have a very low pass rate in South Africa. We need to obviously see that increased as well, so people who come out of institutions actually have sufficient levels of necessary skills that are needed.
Thanks for that. So I guess putting all this together, Annabel, as far as your outlook for the economy for 2023, is there any chance of a revision to the upside, or are you looking at where things are now? I don't know where you can go from 0 to 0.2, but are there further? Is it going to be? Is your analysis or outlook unchanged at this point?
It's unchanged at this point. Obviously, there are risks to both sides. On the downside, we'd see a risk of falling into recession for the year if the electricity situation worsens. And of course, there's a risk over that in winter when demand increases. And of course, on the upside, there's also a possibility of stronger growth if we see government quicker to repair the productive capacity of South Africa. And of course, as well, if we see a stronger outturn in the global economy than currently expected.
Annabel Bishop, Chief Economist at Investec, thank you so much for joining us to discuss the lay of the land as far as South African economy is concerned. Thank you so much. Really appreciate your time.